Hello traders, today it's on a weekend on Sunday, and I want us to analyze gold market XAU. So we're gonna start using daily time frame. That's how I start my analysis. So according to daily time frame, we have this bearish move. This market is moving down, like from this level to this is just a downtrend, but the overall trend of gold is bullish. When you zoom, you're gonna see that gold has been trending up for years. This is uptrend market. So we have to mark where gold is right now. So this is where gold is. As you can see, gold is at support level. Yeah, this is a support. This line has been touched multiple times. So let us write this as our support. This is a support level, and the highest level, the previous high, is this one. So we mark this also as a support and resistance. This market was resisted here and was supported here again and supported, then got resistance here and then support. So resistance, I mean. So this is resistance and support. Okay, so we have now marked the support and the resistance level of this gold market on our daily time frame. So this gold has been trending down, and where it is, it's just touching the line, the upper line, and the support level, resistance, support. It has touched the support multiple times, like 3 times. This was the first touch. This one was the second touch, and another one is here. This has happened this week. This trending week. So this is a triple touch on our support. But when you look at on your left hand, you're gonna see that this market touched here first as a resistance, and here it came and touched here. The market was already here before it break up. That was a support. So the resistance turned into a support, and then later the market came to this support again and got rejected. And another one is here. The market came to this level and got resistance. So this resistance is also a support. When the market is up, it's a support. When the market reaches this point, it bounces up. And when the market is down, when it reaches this point, it got resisted and drops down. So we still have one more. This also a resistance. That market got to this place and then dropped. So after knowing that this market is a short bearish market, like this market is, the overall gold is bullish, but according to the daily time frame where the market is, it's showing us the bearish momentum. So this is a bearish channel. This is a bearish channel. This is a bearish channel. So gold started the bearish movement from here to this level. It bounced again to this level, again to this level, and after that it has been consolidating inside this move from here to here. This gold has not touched this level, this line on this channel, or upper, or has not been touched the upper or the downside of this channel. So let us see on our 4-hour time frame. So after knowing this, we have to go to our 4-hour time frame. And on our 4-hour time frame, when we look at this level very well, we're gonna see these are the touches that we have been marking on our daily time frame. So this is the first touch, second touch, and third touch. So that's so we have to look for where there's an order block and a fair value gap. So when you look on your left, remember the price is here, but on our left we had an order block here, above the support level. This is an order block. So at this order block we had a fair value gap. So this is our fair value gap. fair value gap. Okay, so I have marked the order block and a fair value gap. But when you look at this market, you notice that the fair value gap was mitigated and the order block also was mitigated. And after getting mitigated, the price gave us imposition on candlesticks, and later it swept liquidity here. This is a last before the market closed. These were the 4 hour candlesticks that swept liquidity from here and then closed up over here. So this is showing us that the price is still rejecting this level. So what are we supposed to do? We have to look again to our left. Remember, this support has been touched multiple times, but when you mark from this level here, let us draw here something. Okay, so this is our market structure shift. This is a market structure shift. So the market got here and then went up, dropped, went up, dropped, and then later, why I'm saying that this is a market structure shift, the market came from here and then broke this previous low. So I mean lower high. It broke this and closed above it. So this is our market structure shift. And after doing that, we recognize that this is just like a W pattern. So when we draw a W pattern like this, you find that this is just a W pattern. So after knowing this is a W pattern, you mark again from this bullish candlesticks and then to this high of market high above market structure shift. You recognize that this is a neckline. This is a neckline. Okay, now we have marked our neckline. So we have touches neckline as an SMC trader. So we have to look for a break of structure. So when you mark this line here, you'll find that this is a break of structure. Break of structure. So that being a break of structure, we look at our left upside. So we have this point area when we mark the previous bullish candlestick. So this was our supply. So this market it's in between the resistance and support. But again, when you zoom in, when you look at this market very well, it's still a bearish. We are in a bearish channel. So this is our supply. That's why I'm saying this is our supply. This is where the market gave us double top. This is the first, it's the second, and then neckline, and it broke with a huge bearish candlesticks. Then it gave a retest. After giving a retest, this market continues to drop. After dropping, it entered again into this support and resistance, and also gave us a retest on this resistance. And later, the market continues to drop to this level as support. So that's why I'm marking this as our supply zone area. So our buyers are inside this supply and support and resistance levels from our mitigated order block. So this I'm gonna change its name. Let me say this is just a mitigated. This is a mitigated order block because it has already been filled, and this is also a filled fair value gap. So after knowing that, we have to mark our 4-hour high and 4-hour low. So this is the highest point, 4-hour time frame. Yeah. 4-hour time frame high. This is our 4-hour time frame low. So after marking that, you know this market is really bearish. As you can see, this from this resistance leg to this hole, we see that this market is bearish. So let us first of all remove this channel. So the chart is clear. So we are looking to on Monday to find a position from this level, 4-hour high and 4-hour low. When the market breaks up, let's go to 1-hour time frame and see. On a 1-hour time frame, when we zoom in, first of all, this market has been retested to this mitigated order block and fair value gap. So we have to look for something we call on this bearish market. We have to look for something like this is just a market structure shift here, because the market was trending up, then reached to this resistance and started dropping. Or let us call it change of character. So after giving us change of character, it came and retested this level. So we call this, and after it broke it. So we call it break of structure. This is a break of structure. After giving us break of structure, the market came and retested this level. Here you can see the market retested this level. So after retesting it, it gave us another break of structure here. It's a break of structure. So when you look at this market very well, you can see that it broke this level and came up here to test. Okay, so this is the last bullish candlesticks from this level to here. You can see the market came and tested. So this is a supply, and this is also a supply. So remember, in this market, we have a support and resistance. We have a mitigated order block, fair value gap, and the market on our 4 time frame, it has rejected this support level. And when you look at our 1 hour time frame, it's showing us that the market has been trending down. So where is our target? So let me take a Fibonacci retracement to measure from this level, because this is where the market took place, and it went down to this level at support. You may find that this is our 50% level of Fibonacci. So this is our 50% level of Fibonacci, and we have a 61% and a 78. And as we all know that gold normally touches 50% and it can change the move, or it can go high to 78%. So let me mark my point of target, like from this level here. This might be my target when the price will break up this 4 time frame. So this is my target. That is target where I'm anticipating to take my TP as a buy, or I can take a position, a sell position from this level to downside. So let me remove this. Okay, so this market, I'm thinking that this gold, the way it rejected down here, it can come and break from this level and give us a retest on our 4 time frames, and later come to touch this 8% of fib. Or it can do the vice versa. It can come to this level, and when it gets to this level, it can sweep the liquidity and then continues to drop to the support. So that's my opinion right now. That's how I have analyzed gold, and that's the area that I'm looking to take my positions. So when the market will break this level, this 4 time frame high, and closed up there and came to retest on 1 hour time frame, I'm going to look only for rejection. Okay, so after looking for those rejection and confirmation, I will take a buy position to this level or aim high this supply zone. And when it does vice versa, I'm going to aim only at the support. So let us go to 30 minutes time frame. We have to remove this mitigated order block because we don't need it anymore. This fair value gap, because once it has been touched, it doesn't work anymore. Again, we have to look for something that it's going to work for us. So let us mark this order block. As you can see, in 30 minutes time frame, we have order block. We have order block here. This is the last bullish candlesticks that set the liquidity, and then we got this bullish candlesticks. So this is our 30 minutes 30M order block, and then we have a fair value gap. Because we don't mark order block, we don't have a fair value gap. We must have a fair value gap, and if we don't have a fair value gap, we use Fibonacci retracement duration. So this is our FVG. Okay, after having our FVG, you can see that this market, it gave us something like, I don't know how we call it, but I can consider it as a bullish flag, because this market came from this level to this and later started to building up. So we are just waiting for a breakout from this level and give us a retest. Our target is all this high. And if not, this market must have to show some rejection from this level and give us bearish momentum. We are going to sell. So that's it, my people, and remember one thing, that this market also gave us multiple rejection at this support, showing that buyers, they are holding their power onto this support. They are not allowing sellers to surpass them. So when you look at also at this level, this thing here, you're going to see that this market was just choppy. It doesn't have a formula. Here it was just choppy, and later it broke upside this level. And when it got to this level, it started showing rejection. So it might go up and sweep liquidity, continues to drop, or go up and close above this forward time frame high and continues going up. So that's it, my people. Thanks for watching. Consider subscribing if you have not. I'll be thankful.